Hello traders. In this video shared a strategy that involves using several indicators on TradingView to identify potential trade opportunities. The TradingView indicators I'm going to show you in this video will blow your mind. Go to the Indicators tab and type in dots by intro motto. Edit your chart. And to make this indicator more effective, go to the settings. And under inputs, you first change the fast period from 11 to 15. And then you go to the MET period, changes from 12 to 20. And the slow period from 22 to 25. And here, we're going to change the first oversold level from 20 to 30, and the first overbought level from 76 to 70. And then you go to Style. And here, we're going to use only one level for the oversold and overbought region. So you uncheck second oversold and overbought as well as the third oversold and overbought dots. And here, you change the first overbought dot color from yellow to red. Then you can also change it to arrow. I like to use arrow to see the signals. Then you click OK. This indicator will help us catch trend reversals based on RSI overbought and oversold levels. But as you can see here, we get a lot of signals and we're not going to jump into a trade as long as we get a signal. We need another indicator, and for that you go to the Indicators tab and type in RSI plus backlight, overbought, oversold by Crypto Insider. Edit your chart. This is basically a more beautiful RSI. We're going to change some settings here. Go to the settings and here under Style, you first make the RSI line bit bolder so that we can see it better. Then you scroll down and as you can see here, we have the option fill background between up and down line. So you uncheck this one here and then you click OK. So we will need another indicator for this strategy. But first, let me explain you some basics here. First of all, we get our signals from the dots indicator as long as we are trading in an either oversold region like here or an overbought region. And it's very important that we don't trade on the signals alone, okay? And we will check the RSI before we enter a trade. For example, if we get here a potential trend reversal to the upside, we will wait for the RSI to cross the oversold level, which is 30 here in this case, and then we can enter the trade. Furthermore, we can also use the RSI to do some technical analysis before we enter the trade. As you can see here, we have a higher low in the price and a lower low in the RSI, meaning that we have a bullish divergence. I can draw it for you as you can see here, higher low in the price and lower low in the RSI. This is a bullish divergence, meaning that the price is likely to go to the upside. If we do this, we make our trades even more accurate. If we would open a trade right here after the signal, we would have the potential of. So we set our stop loss in the latest swing low, which would be right here. And then we target the next level of support and resistance. I will show you another indicator later on. As you can see, we have here potential profit for more than 6% on the next leverage, more than 60%, which is really a good trade. And I found a nice another indicator which is awesome and will make our strategy even improve. So go to the Indicators tab and type in BJ key levels. As you can see here, we have Jorgum key levels, which is an editor's pick, you add it to your chart. And now we have to change some settings here. So go to the settings of this indicator. And then the inputs, you change the look left from 20 to 18, look right to 13. And then we have here the number of pivots, you change it to 5. The ATR length from 30 to 32. And then we need a zone width for the ATR of 0.4. And now we have our setup for this indicator, you click OK. And before we go back to the strategy, let me give you some basic fundamentals about this indicator. If you have some experience in trading, you have certainly heard about supply and demand zones. A demand zones is basically a level in the market where the price is likely to go up because we have a huge buy pressure. And this is the zone where the big institutions and banks are coming in and buying the assets, meaning that the price is likely to go up. On the other hand, we have the supply zone that means that when the price goes up, we have a huge sell pressure. And here again, the big institutions, banks are coming in and selling everything, and the price is therefore likely to go down. And as a retail trader, you can take advantage of that because if you know where to locate the supply and demand zones, you can use them as your potential level of supply and support and resistance, which will be relevant when you want to enter or exit a trade. And when we are looking at supply and demand zones for support and resistance levels, it's very important that you look at the higher time frames. You go to the time frame and then you choose 4 hours, for example. And then as you can see here, we have this big supply and demand zones. And what I will do here is to draw a rectangle on these zones for me to use it in the lower time frames. And once you do it, you can go back to your lower time frames, the 15 minutes, for example. And now you have available information about the big supply and demand zones from the higher time frame that you can use as a more relevant support and resistance level. So in this case here, we can delete this trade to see it better. If you want, you can also make it invisible again. Now you have here the relevant levels of supply and demand from the higher time frames, and I would definitely consider it as my relevant level of resistance because as you can see here, the price goes up and seems we have here a big supply zone. The price is very likely to go down. Furthermore, we also come into the overbought region from the RSI. As you can see here, we have a lower high in the RSI and a higher high in the price. In this case here, we have a bearish divergence, so the price is very likely to go down and then you can choose to either target the next level of demand or you can also, if it's too far away, you can also choose another level. For this you can also check the smaller time frame. For example, this level here will be interesting if you will target this here to set your short position. That's it for the video, guys. I hope you enjoy it. But if your goal is to growth a small account fast, this risk per trade might be appropriate. So give the strategy a try, but don't skip the forward testing phase on a paper account. I can't stress enough how important it is. If like this video, hit the like button and subscribe to the channel if you haven't done it already. See you soon. Thanks for watching our video.